morning. I'm Sally Brewer, and I head the EMEA research team for industrial and logistics at Cushman and Wakefield. And this morning, our topic is retail and logistics, two sides of the same coin. Our question is, are they separate things, or do we need to think differently? And how does the rise of online retail in particular affect the store, and what does it mean to logistics real estate? So this is a bit of a challenging question at the moment, not least because of the pandemic and but the trends over the last 5 to 10 years being accelerated. And as is often said, necessity is the mother of all invention. So the question is, what's happening now that is changing the way in which we think about retail and logistics property? So just to set the scene, this chart on the left-hand side shows the total spending across Europe and the percentage of which online represents. Over the past 10 years, we've seen a massive transformation across Europe. And since 2015, we've seen already an extraordinary leap forward. In 2015, online retail accounted for about 6.5% of total online spending. In 2019, however, it had risen to about 9.5% European-wide. However, this is not evenly spread, and we have difference across different countries, but also across different segments of the market. Across countries, by far the UK is the most deeply penetrated market in Europe, but by segment we have penetration rates by different product types, as much as or just over 40% for electricals and electronics. Fashion is also high at just shy of 30%, but food and grocery lag at under 5% European-wide. But in terms of total spending, food and grocery is by far the largest amount of spending of all retail spending, but it represents a huge growth potential for online as a proportion. So what's so important about now? Well, what we've seen over the past 18 months or so is a massive uptick, a massive leap forward in terms of online penetration. Our data providers from Global Data suggest that where we were in 2019 at just under 9.5% has pushed forward to 12.3% Europe-wide in terms of online retail penetration. That's about 5 years worth of growth in just one. And what we can see from their expectations going forward over the next 5 years is that won't be falling back. The expectation is that this leap forward will stick, and that online spending will continue as shoppers have changed their habits as a result of the past 18 months or so, having been forced to look at online as their only outlet for shopping in many cases as a result of lockdowns during the pandemic. And that's now an opportunity for retailers to consider how they convert those new shoppers to online and embed the shoppers who they previously had in their fold to commit further and deeper to their brands. And we can see that by some research published by UPS that shows, this is quite a challenging chart, but what we can see here is that in the pre-pandemic environment, shoppers very much started their shopping journey in store. So 54% of shoppers were starting at the store first when they were considering their purchases, and just 10% were considering their purchases online first. During the pandemic, that's all changed, and a third of shopping experiences were being started online and only 22% in store. Rather than unwinding and returning back to the position where it was pre-pandemic, we've now found that UPS's research has found that in the post-pandemic environment, there's now much more of a hybrid environment operating, where The shopping journey is a combination of online and in-store. 41%, the highest proportion of journeys now start as a combination of online and in-store, whilst the store has come back into 40% as opposed to 54 pre-pandemic. So what this means is that the shopping journey is now a lot more complicated than it used to be. I think somebody's just come off mute. If I could just possibly, there we are, I've just muted. So what we need to understand is how this is going to affect both the store journey and the online journey, the online retail experience for shoppers, and the opportunity for retailers to consolidate with their online experience, with their online offering for customers. And what's challenging about this is that consumers are now moving seamlessly between the physical and the digital. The retailer has to contend with a shopper who wants to be able to enjoy the same customer service, both in-store and online, and be able to engage with a brand and a shop environment, a selling environment, both online and in-store, in the same way that they choose to. And the retailer has an awful lot to try and keep up with. But they do have the opportunity, particularly with the advent of online and the growth in online over the past 18 months, to be able to embed their brand awareness and loyalty and deepen their consumer relationships with their brand. So what does that mean to the retail supply chain? So once upon a time, it used to look like this, where products were made, moved to a retailer's warehouse, who then moved it to a shop, and then the shoppers would come, buy the product and take it away with them. Online now looks a bit more like this, which is far more complicated and far many more options about how the product gets to the end destination, particularly as the shop is only one way to get the product. There are so many more ways that it's being delivered, and also so many more destinations. So that may be to a consumer's home. They may be choosing to click and collect from a store. They may be looking to have it delivered to work, or a variety of other locations. And that's also further complicated by the returns journey, which, if a product is no longer required or they've already chosen a couple of options, the products need to get back into the retailer's supply chain to be able to then be resold. Now, what's important to note is that this is not one or the other, it's both at the same time. And this complexity creates challenges for retailers and, importantly, cost. So logistics have been pushed further up the value chain for retailers. Logistics is no longer an operational necessity. They're a strategic necessity in considering what and how to deliver product to consumers. So how do retailers and their logistics partners achieve all this? How do they create appropriate retail spaces while delivering the goods to consumers and stores in operationally cost-efficient ways, which are margin enhancing? And this is crucial to consider about retail logistics. It's all about marginal gain, and it's all about cost to serve. So what do we need to take into consideration when thinking about what supply chains look like for retailers? First of all, we have to consider what type of retailer is using the space. Is it a store-based retailer only, online only, what we call pure play, or are they a multi-channel retailer? What types of products are they managing, and how many types of products, different types of products, what that means to the types of stores they're operating from, and what types of warehouses they need. And where are the goods going? Are they going to a store network or purely to online customers, or a combination of the two? And vitally as well, particularly for online, for multi-channel retailers, what kind of property does the retailer have? Do they have a store network that also needs to be serviced, but also potentially represents an opportunity? The important note to make is that the important things to consider is what is the best way for retailers to get goods bought directly to consumers. Now, let's first consider retail online. Given a choice, a warehouse is a far more efficient environment from which to serve online delivery to consumers. Systems employed at scale for singles picking and packing can be far more optimally operated, which makes managing cost and enhancing margin far more efficient. And what's important to know is that mixing operations in warehouses of bulk deliveries to stores and singles handling and deliveries for online consumers, online fulfillment to directly consumers don't work efficiently. So it's more costly to mix operations than to have them separate. Current warehousing space for retailers that they use for store delivery may not be as operationally efficient or appropriate for online delivery. So reorganizing and reconfiguring may be only part of the solution. And we've certainly found over the past several years that the online sales fulfillment is being far better served in modern buildings. Modern buildings are more efficient. They're more capable to accommodate the systems and operations that are configured inside buildings to be able to manage online picking and packing and distribution systems. And so modern space is far more attractive than older ones, particularly for large scale operations. Consider that retail logistics is the sum of incremental gains. And the chart on the right here, which comes from Capgemini, shows that the last mile of the delivery is the largest component of supply chain cost for delivering goods on the retail supply chain. So it's in this part of the supply chain for online, the last mile, that we're starting to see some consideration around what may be the best way to achieve this for retailers. And so we are starting to see retailers considering their physical stores as micro distribution points, places where products can be picked, packed, and delivered directly to consumers. Some of the advantages of store-based fulfillment is the close proximity to customers. And so utilizing stores that have been deliberately put in places close to where consumers live mean that retailers can make incremental cost savings for each delivery, which, as I've already mentioned, is the sum of incremental gains in retail logistics, and the cost to serve is hugely important. We've seen retailers such as fashion retailers like Zara and Hobbs, and DIY retailers or home improvement retailers such as Kingfisher, who operate as B&Q and Screwfix in the UK and Ireland, and Castorama and Brico Dépôt in Europe, using their stores over the past 18 months, and in some cases earlier, and beyond, to get product directly to consumers. Now, much of the counter-argument around using stores for fulfillment in recent years has been around the compromise that store-based picking of online orders means for interrupting service to the in-store experience, both experiential and convenience. But with the challenges of COVID and the lack of shoppers in actual stores, this was less of an issue for some retailers. And so they were able to understand the potential that retail micro-fulfillment from store can offer. And let's talk a little bit about which product types and which store types may best have the opportunity to realize some of this potential. So firstly, which products? We're certainly seeing grocery being adopted far more widely, and arguably has the greatest opportunity, particularly with with the increase in demand for online grocery delivery through the pandemic and beyond. And the fact that supermarkets are deliberately close to consumers, they also, in many cases, have the opportunity to be able to utilize some of the larger floor space, which I'll come onto in just a moment. But the floor space being a crucial factor, and the ability to be able to utilize car parks and that are deliberately set around hypermarket and larger supermarkets type footprint stores. We have seen some UK grocery retailers already start to utilize their stores and can reconfigure their store network, their stores differently in order to be able to achieve direct to consumer fulfillment for online orders from grocery stores. Bulky goods are another area where retailers have the opportunity to utilize their stores more effectively to deliver over the last link, and products that are typically delivered to store in larger sizes. So they're being sent to stores in larger, bulkier product volumes in pallets or master cases. And so there is a greater volume of stock in store, which can then be picked off shelves as singles by staff in store for online delivery. Other product types such as fashion and electronics, there are opportunities to do this. And I've already mentioned Zara being a proponent of this, particularly during the pandemic. And we've seen some of the product types where there is greater penetration. There may well be opportunity, but it's perhaps an area that's developing rather than one we've seen a great deal of rather than we've seen great adoption so far. But it also we have to consider the types of real estate that may be most appropriate. As I mentioned, grocery has potentially a significant opportunity for this because of the nature of the store's footprint and the car parking around them. This is particularly the larger hypermarket style or supermarket style offering, where you have where there is an opportunity to both segment floor in-store retail versus the online delivery. So we've seen some retailers like Tesco already starting to carve out some of the retail floor space, using it specifically and exclusively for online grocery sale fulfillment, so that the two are not mixing. For retail warehouses in particular, also we have the larger format stores that lend themselves to efficiency by picking and delivering directly to store. And we also have the opportunity to utilize car park and delivery spaces around retail warehouses and parks and gross and hypermarket style environments. Shops on the high street and shopping centres perhaps have not as great a potential as the grocery and the retail park environment, particularly because the high street shops in particular, the size of the stores may mean that there isn't a significant inventory being held, and therefore there may be challenges to maintaining the in-store experience by preserving availability of product, so that there is the opportunity for in-store shoppers to be able to have availability of the products, to be able to buy them. For shopping centres, similarly, but there are also perhaps some points of friction being able to deliver directly from store, unless there is some concerted effort on the shopping centre manager side, by virtue of the fact that there is further to travel through the shopping centre for the courier to pick up and then dispatch. And as I mentioned, it is all about cost. So any point at which there is greater cost, time, then even through time, then that becomes a challenge. It's not to say there aren't opportunities, it's perhaps just that there are a few more challenges to surmount. So what does this mean for real estate? So for logistics property, it means more demand, because warehouses are the most operationally and cost-efficient way of being able to serve. Particularly because store delivery may not be as efficient as store delivery network. Sorry, the current space being used for store delivery may not be as operationally appropriate for online delivery, particularly when it comes to the modernity of buildings. And it's important to consider what that means for the overall stock of space and what that is available. And typically we are seeing more modern space being delivered because that is what's required for the changing retail logistics requirements. For retail, it means that the physical space for shoppers as an experience to immerse themselves remains vitally important, and consider that across the whole of Europe, still the majority of sales happen in store. It doesn't mean that all the retail space that's currently being utilised will deliver what's required, be it experience or convenience. And there may well still be some right sizing or right specking of retail space to come, particularly as online grows and becomes more embedded. But it does mean that stores also offer another option, not just the in-store shopping experience for shoppers going to buy products in an actual shop, but also as micro fulfillment locations for the online proposition by retailers. That means thinking carefully about what retail stores can be used, be it hypermarkets, retail parks, shops, or shopping centres, what that means for different types of products and what it means for different types of retailers. And for investors, it means particularly to consider carefully the value of each asset in your portfolio to the retailer in the movement of the goods to the consumer. Retail logistics is all about incremental gains to improve operational efficiency, reduce the cost to serve, and preserve or improve margin. So it means think carefully about what your properties in your portfolio that you own mean to your tenants. And if it means something important to the tenant, it means that it will remain valuable in your portfolio. And it means also engage with the tenant to understand how that value is maintainable over the life of the hold in your portfolio, and particularly to the tenant and their tenancy over the course of the lease, and into the future for any potential occupiers. So thinking about what this means for Portugal. So firstly, let's consider what it means, what the online story looks like for Portugal. So the chart on the left-hand side, again from our data providers at Global Data, shows that the online retail penetration rate in Portugal has followed suit like it has done across Europe and across other markets. That 2020 represented a significant propulsion forward in the online story for Portugal. In 2020, it reached 6% as a penetration rate, up from 3% in 2015, and that's expected to continue through the course of the forecast period to 2025 at about 8%. But Portugal is still some way behind other European countries and Europe as a whole. It is growing, but it is still a relatively small proportion of what it means to shop in Portugal. What's interesting is perhaps if we consider the story in Italy over the past several years, you'll see here Italy in 2015 actually had a lower penetration rate than was in Portugal at 2%. It's somewhat caught up and extended beyond Portugal in 2019. And in 2020, we saw Italy really accelerate forward in terms of its online penetration, growing to 7% in 2020. Perhaps arguably because they were they were the first European country to be locked down early in the pandemic. And as a result, they've seen a greater adoption of digitalization and an economy that had previously not perhaps had penetrated as far. And now there's real momentum behind this shift. It's expected to continue. So what does it mean for property in Portugal? So these two charts represent some of the property dynamics relating to retail on the left-hand side and logistics property on the right-hand side in Portugal specifically. So first, considering on the left-hand side, this shows the current retail stock in Portugal by the year in which it was delivered to the market and the type of property that has been delivered over the past several years. So what we can see is that over the past few years in particular, we've seen far more retail park space being delivered in response to increasing interest from occupiers, particularly from food and grocery retailers and homewares retailers. And as we've discussed, these types of stores offer opportunity not only for store shopping, but also for potential for micro-fulfillment as online retail spending grows. What we can also see is that there is an awful lot of shopping centre space that's currently being utilised in Portugal. And it perhaps needs to be carefully considered as the appropriateness of the types of space that retailers need to engage with their customers. What does it offer the retailer, and what does it offer the shopper? If there are opportunities to consider asset management opportunities for holders of shopping centre space, particularly that which may be somewhat more challenged in being able to sit within the experiential or the convenience side, then what other opportunities does the shopping centre space offer, both in terms of repurposing or reconfiguring, and particularly when it comes to the online proposition, what can the space achieve other than just as an in-store experience? On the flip side, what does this mean to logistics property in Portugal? And we can see from this chart that demand is growing overall. But what we can also see is that the demand for build to suit space has been growing quite significantly. And in just the first half of 2021, we've already seen over 120,000 square metres being taken by occupiers as built to suit space, more than half the space that's been taken in just the first half of the year. And what this perhaps tells us is that developers and investors with an appetite for development funding have the opportunity to position for more growth in occupier demand, particularly demand for modern, newly built space, by bringing forward speculative development, as well as built to suit. But speculative development offers perhaps an opportunity to capture some of the burgeoning demand from occupiers. We've already started to see developers bringing speculative space forward, such as VGP, Aquila Capital, Merlin, and additionally Panattoni, who are readying several sites. And we've seen the speculative development that has come forward going swiftly. And where we can see that there's more product being expected to be delivered in 2022 and beyond. So it's not just an opportunity to think about what development opportunities there are, for new space, but also asset management for existing property and what that might mean for upgrading or improving existing buildings, and particularly those that may be a little bit older and less operationally appropriate, to see a real value change through some capital expenditure, but being able to realise the value upshift and capture some of this burgeoning occupier demand. So things to think about: that retailers are really making plans to maintain their customer base, particularly in the online story, that retail space and logistics are going through changes, that there is real opportunity to consider what this means for you as investors, both in the broader context of retail and logistics, but particularly in Portugal, about what type of space you hold and what you could hold and what it could represent as things evolve in the retail and logistics side to your portfolios and value to you and your tenants. I'm going to hand over to our colleagues and to you for question and answers.
Thanks very much, Sally, for that presentation. And we've obviously got Paolo Sarmento, who's Head of Capital Markets for Cushman & Wakefield, Portugal. Paolo, welcome. It'd be interesting just to pick up from you, I suppose, particularly how are you seeing the market there in Portugal, and interested also to get that take on both the retail side as well.
Well, we couldn't be talking about two more polar opposites these days. I mean, it's all about logistics these days, pretty much logistics and PRS. That's where all the money wants to go now. And investors have enormous pressure to increase allocations to both these sectors. And then when it comes to retail, we have a bit of a mixed, a polarized situation where you have all sources of long-term income resale related, like supermarkets or even other forms of sort of standalone retail units, big boxes, electronics, DIY, furniture, etc. All those things still having a lot of demand and trading very well, and cap rates actually compressing. Retail parks doing relatively well, and then shopping centers, there's no conversations about shopping centers whatsoever. Most investors are still very wary about this asset class. I think the specific events that we had in Portugal last year didn't help too. So I think we need probably a period where NOI stabilize and shopping center owners are able to provide again some sort of security on income before we can start having meaningful conversations with shopping center investors again.
And I suppose, Paolo, looking at some of the trends that were mentioned there's obviously been a growing focus on e-commerce because everybody's been kind of driven down that route. But how much of that do you see, I suppose, continuing post-pandemic? I mean, what's your sense of that, particularly in the Portuguese market?
Right. And here I have to defer to my colleague Sally. And actually, this is one of the points that were mentioned in their presentation. It seems there is a consensus that there is no going back on this. And the majority of the retail spending that was directed towards the online will stay online. I'm very curious about that particularly because, I mean, things in Southern Europe in terms of internet retail penetration are very different and have been very different from the most developed countries, namely the UK and the US. It will be interesting to watch. And we have a couple of very interesting cases to follow, and they have behaved differently. Spain didn't register this as much of an increase as Italy did. Italy was used to be at par with Portugal in terms of internet retail penetration, and Spain was slightly ahead. And we saw Italy take a much larger leap during the lockdowns, maybe because the lockdowns in Spain, in Italy, apologies, were very, very strict and very prolonged. So it will be interesting to watch. I think the dust still has to settle on that. My gut feeling would tell me that a lot of that consumption in Southern Europe would go back to physical retailing, but that doesn't seem to be the consensus of the experts. A lot of these research is sort of driven by logistics experts, and of course, I think they are partial to this growth of internet retail. So we need to watch this space, I believe.
Yeah, no, that's interesting. And in terms of the focus there more on food retail and those kinds of things, what's your sense of that? And also, do you see retail beginning to move more towards that kind of experiential element and a crossover between retail, e-commerce, in the sense of delivering directly to customers, creating the sort of experience that customers want as a more efficient way of shopping?
Right. We have, again, a bit of a polarization. We have the polarization between experience on the one hand and convenience on the other. So all you were mentioning about these food stores and the big DIY units or the big standalone units, these are all about convenience, and you have experience retail. And you have some brands which are actually very smart and have understood the power of physical shops to actually influence buyer behavior, even if the purchase action takes place online. You have research, for example, UK-based research done by CACI, which demonstrates that every time that a physical retail unit is open on a catchment which was not previously served by physical retail, the online sales in that particular catchment more than double, which basically attests to the importance of having physical units. And you have, for example, the likes of people like John Lewis, who, for every online sale which is done, the sales staff of the physical shop that is located in the area where this order was posted gets a part of the sales commission, because it's basically understood that the physical staff in the physical store had a very important role for that online order to happen, because the customer has probably been to the store before, he has been educated in the store, he has been wowed by the store, and as a consequence of that, an online order took place. And so these very smart retailers understand the very complex interaction between the experiencings of physical retail and then the act of purchase, which may take place online.
And just in terms of the sort of last mile element, Paolo, are you seeing an increased focus on that? And I suppose what does that mean in terms of the types of buildings that investors and I suppose occupiers, tenants are looking for now?
We are seeing a lot of demand, not necessarily a lot of take up, because a lot of the buildings that would suit this kind of use in the edge of towns around Lisbon and Porto especially are still quite expensive, and if they are suitable for other uses, it's hard to make them work for last mile logistics. So we haven't seen a lot of actual projects taking place. I also believe that some people have been a bit over optimistic in terms of the potential conversion, for example, of former shopping centers into logistics hubs. On the one hand, the way the shopping center is physically configured is not conducive to a good conversion into logistics. And on the other hand, there's a question of value. I mean, a lot of people that own these shopping centers are hinged on sort of historic valuation levels, and if there is a conversion to be done into sort of like last mile logistics, etc., we cannot ignore that will have a tremendous impact on value. So there's also some resistance from the part of shopping center owners and the owners of other type of properties to accept that the lifespan of those assets as they've always known them is over, and they need some sort of conversion. There are already examples they're taking place of this. Okay, good.
Antonio, anything from your point of view?
No, very interesting representation. This will really reshape how our cities look like in the future ahead, and this is a lot of discussion between this balance between shopping centers, online retail shops, and one of the last things that I just want to raise is that the car parking space
Mm-hmm.
will probably play some role on on this game as mobility is changing, electrical mobility is changing, and car parking space will be more free to make.
You can see that even in the large food stores now, in which you have a bigger component of using those stores as providers of merchandise for online sales, that some parts of the parking facilities which were previously allocated to your individual customers are now blocked and are parking facilities for lorries, which come over to the store just to satisfy online demand. So you see, even in the physical shops, there are parts of the physical store which are no longer allocated to sales area, but to fulfillment area. And you have areas of the car parking, which is no longer car parking for customers, but for lorries to satisfy the online demand.
Yeah. And another thing that I have a teenager girl daughter.
Mm-hmm.
In August, she was ordering a sweet bath, and for buying one, she was ordering four.
Mm-hmm.
Because free return, she says I order four, and then I will take one and the deliver free. And this act of returning a packaging is a disaster for the online sales. So returning sales should be in a shop. How this balance?
Well, it depends really. If you have a network of shops which is very capillary, so you have a lot of granular little shops, and you can do most of those orders and those refunds through click and collect, then it's a bit less painful for the retail unit, because instead of being at home and returning your items from home, you actually need to go at least to the shop and return them to the shop. That will help. But the truth is, and especially with rising fuel costs, that this is a very important cost in the bottom line of retailers, and sooner or later, I think the trend is for those refunds to be charged to people. Also, I think we need to remember that one of the underlying trends behind this will be ESG, and retailers are also under tremendous ESG pressures. And of course, to offer free refunds and to have all these extra trips just because people, as you said, they want to buy 3 and order 10 to return the other 7. Even retailers will be under a lot of pressure to stop having this for free, because it's clearly violates their ESG obligations.
Yes, very interesting. I think that return side has been something that again has changed over the recent, even over the last kind of 12 months, particularly given the pandemic. So really interesting to get your views on that. Thanks very much, Paolo, for joining the session. Also, thanks, Sally, for the presentation. Really interesting.